Gold closed the week at 4045. You can see right over here. It is currently sitting right on the floor. It has defended all month long. For 4 straight weeks, selling the top was the trade and it paid every single time. But something shifted in the last 3 days that changes the picture heading into August, and nobody almost is talking about it. So here's the plan for this video. We will start with what the big money is doing. We are going to walk down through the different time frame together. We are going to discuss the weekly, then daily, and then 4 hour time frame. We are going to mark every and we are going to discuss every level that matters for gold. We are also going to discuss the data that can move gold in next week, and we are also going to discuss the 3 trades I am actually watching for next week. So let's get into it. So let's start at the top, the weekly, and with what the big players are actually doing, because it sets up everything else. So as you can see, this week they decreased their long holding by about 2800 contracts. But here's the part most people miss. In last 2 weeks they were actually increasing their longs. So this is the first week they have decreased some contracts. A small reduction, not a big sell off. But if you look at this reading here, this says stretched at 48%. This simply means they are still holding a lot of long overall. So the picture is clear. The big money is still positioned long on gold, and they have only just started to reduce a little right as price sit on the support. So, and the panel, if you read the overall verdict, it says none, no clear signal either way this week also. So we call this one neutral and let the price levels to do the talking. Now let me mark the weekly zones so you know where the real reaction lives. As you can see on the chart here, price is sitting inside weekly demand. This buy zone from about 4059 down to 3884. So as you can see, we have seen multiple attempt on this zone, and price is trading inside this zone multiple time. So this is a meaningful support, and if this demand ever fails, there's not much underneath until monthly demand way down here around 3453 to 3281. So this weekly buy zone we are sitting in right now under the demand zone. So we have to keep this in mind. We will come back to it later. Next, if we see the weekly intermarket, the macro backdrop, and on the surface, this looks brutal for gold, because the weekly tailwind score is basically at the floor with the drivers reading essentially 100% bearish. You can see right over here. Let me show you why. On the weekly, the dollar is still elevated. Real yield are still rising. The VIX, the fear gauge we can say, is low and calm, and gold price in euro is still falling. If we put it together, and yes, the big picture macro is still a headwind for gold, no argument here. But this is important. The weekly panel is slow. It's based on the week what already happened over the last several weeks, not what's happening right now. The odds looking forward are basically 50-50, and the season is neutral. So remember this. The weekly says headwind, but as we drop to the daily is about to disagree, and that disagreement is what whole story for the week. So let's drop to the daily, and here's the shift I mentioned at the start. On the daily, the headwind is much softer. The drivers ease off from fully bearish to more like 73% bearish, as you can see. And the single biggest reason is the dollar. Look at this. As you can see on the chart here, the dollar has slipped back under 100. Now watch this. It held above 100 all through July, right up here around 101, 102. This drop under the line is the first time it's been down here in weeks. So that's the real shift, and gold usually loves a softer dollar. Now bring that over to gold daily supply and demand. Price is sitting inside the weekly demand. We already discussed this, we marked. So right here, but now with a softening dollar sitting above it, support underneath, and the one thing that's been crushing gold is finally easing off. That right here, right over here, is a better setup for buyer than we have had in months. So if we see this chart on daily, you can see this is the most important chart of the week. So let me discuss this with you. First, read this structure, and to be fair, it is still bearish. The last week is a lower high. Last high, sorry, is a lower high. The last low is a lower low. Resistance sits up here at 4129, support down at 3976, and across the time frames, the 15-minute, the 1 hour, the daily, the weekly, they are still bearish. The only one flashing bullish is 4 hour, which we will get into. But now the trend line you can see, because this is the tension coming off from the January-February high. We have got this falling ceiling, you can say, and count with me, price has now tested it right over here, 1, 2, 3 and 4, 5 rejection right around the current high. But underneath we have got this rising trend line, higher low setups stepping in. See what's happening, the ceiling coming down, the floor coming up, and price is getting squeezed into a tighter and tighter area, right into the current corner. So a triangular shape like this can't hold forever. It breaks, and the direction it breaks sets the tone for all of the next month. And notice Friday closed red, down about 1.5%. So the sellers defended the top one more time into the weekend. The spring is currently, you can see, is coiling, and we can see breakout at any moment from this narrow area. Now let's zoom into the 4-hour time frame chart, and because this is where the buyers are quietly showing their hands. On the 4-hour time frame, we are in accumulation, you can see right over here, and this accumulation is for the big players, where the big players quietly buying up gold before a bigger move. And here's the sign, you can see we have 4 springs in here. You can see a spring is simply when price dips just below support to trip up the sellers and then snap right back up. We have 4 of those and none of the opposite, no failed push higher, and that's a classic sign that buyers are the one in control down here. But I'm going to be straight with you, because there are 2 warnings. The last spring is getting old now, about 20 bars back, and the most recent test come into the light volume with no real demand behind it. So the buyers are set up, but they have not stepped in hard yet. The 4-hour range is roughly 4023 support up to 4382 resistance, and we have closed at 4045, just above the self that's held for time. So the base is there, we just need to see the demand shows up with conviction. Now here's the map that we have to watch for the next week, because the timing is everything. It's going to be a jobs week. You can see Monday we have ISM manufacturing, Tuesday job opening, Wednesday ISM services. Those are the warm up acts positioning, but the main event is Friday. You can see non farm payroll forecast around 91,000 jobs, with unemployment expected to tick up to 4.3%. And the logic is simple: a soft job number pushes the dollar lower, and that help gold. A hot number does the opposite. So everything before Friday is just price coiling inside the range that we discussed on daily. Friday afternoon is the move. Expect a quiet start of the week next week and a sharp finish, same as we finished this week. So the bottom line is we have to put all together. The bigger trend is still bearish, no question, but it is running out of steam. The dollar just cracked back under 100 on daily. There is a base building on 4-hour time frame, and the big traders decreased their long holding for the first time this week. Against all that, the weekly macro is still a headwind. They are still holding a lot of long overall, and that 4129 trend line has now rejected 4 times. So that right here is a coiling spring. Price is squeezed between a rising trend line and a downward trend line, and the NFP on Friday is the most likely trigger to finally release it. So now let's turn all of this into an actual plan. 3 setups. So the setup 1, the selling into the high. If price pushes back up into 4100 to 4130 and reject, yes, we have to watch the rejection cleanly of the trend line, then we can take a sell. And the stop above we can put at above to 4145 right over here, and the target will be for this selling is around 4024 and then 3976. This has worked all month. We already discussed and traded this in Telegram channel, but I am sizing it smaller now because the dollar break under 100, which weakens the case for selling. And the setup 2, the dip buy, and this one gaining weight. If we get a fresh spring into 4023 to 4035 with real demand behind it, a strong bullish candle after confirmation, not a weak candle, that's a long setup. And the stop for this long below 3995, and the target for this long should be around 4080, then 4129. So we have to wait for the demand near to this buying area. Don't buy the weak test, we have to buy at a good strong test. And the setup 3, the breakout. Yes, this is one that matter for next month, that is for August. A daily close above 4129 with the trend line breakout, and I am long. You can take a long means over here, and the target we can target 4180, then 4236. A soft NFP plus a dollar already under 100 could be exactly what can generate this setup. So highest reward of all the 3 setups. So this is the setup that I am actually watching for next week. So which side finally I am on? For the first time in a month, I am close to neutral with a slight lean to the buy side into weakness. Sellers still control the structure, but buyers now have the dollar and that 4-hour base. The big traders stay neutral, still holding a lot of longs, but starting to reduce, fade, or you can say sell the top if you get a clean one, but the cleaner trade this week might be buying a spring near 4020 or waiting for a breakout over 4129. If this breakdown helped you see the week clearly, you can join the Telegram from the description or from the pinned comment below. So see you into next one.